Hello, everyone, and welcome. WMLAR is excited to offer our Next Level Success webinar series, free educational opportunities designed to help members strengthen their businesses, tackle real-world challenges, and continue growing professionally. Today's session is Community Living, Navigating Associations, Rules, and Shared Ownership with Stacey Ruwe. Stacey Ruwe of City to Shore Gateway Group serves on the WMLAR Board of Directors and is a respected managing broker, community advocate, and industry leader known for her compassionate approach to real estate and dedication to serving others. With more than a decade of experience, Stacey specializes in guiding clients through complex life transitions, including probate and divorce sales, while bringing a calm, knowledgeable presence to every transaction. A national advocate for realtors and community service, she serves on the 2026 RPAC Major Investment Council and has been recognized as the National Association of Realtors Good Neighbor Web Choice Favorite for her work with homeless prevention partners. Stacey's leadership extends through organizations such as the Women's Council of Realtors, the Michigan RPAC, and Browse for a Cause Lakeshore. Her many honors include the Lakeshore Athena Award, Realtor of the Year Award, and most recently, the Realtor Active in Politics Award, reflecting her lasting impact on both the real estate profession and the communities she serves. Welcome, Stacey.
Absolutely. Happy to be here. Sorry it took a bit to get on. The link I had wasn't working for whatever reason, but we're here now, right? Oh, let's see. Um, say, Andrea, you've got the people popping up.
Yep, I'll
Perfect.
take care of it.
Okay. Awesome. So anyway, yes, Andrea did a great job introducing me. I've met, I think, most of you at some point in time here. But again, thank you for being here. We're going to talk just a little bit about some of this community living stuff here, like associations, all their rules, what shared ownership different options are, that kind of thing. So, um, how many of you have some experience with dealing with shared living? So HOAs, all of that. Have most of you dealt with it at all?
I'm
Not
new.
me.
I'm new in the game, so
Okay. I will tell you as we go through the class, if there's something I'm talking about that you have questions on, whatever it is, please just feel free to unmute and ask. You're not going to
okay.
throw me off. And that's for anybody. Say, I've been doing this a while. Some are new, some are not. But the reality is, some of these things, even if you've been in this a long time, you may not deal with them very often. So, from that perspective, please just feel free. I like a pretty laid back class. So, we'll get going here. Maybe. There we go. All right. So the goal today is to help you guys all understand how these things work, what HOAs are, what you need to be watching out for your clients. And that's for buyers or sellers. It seems sometimes that maybe it's targeted to one or the other, but the reality is when you're dealing with condos and co-ops and homeowners associations, it really does affect everybody. And the more knowledgeable you can come across on it, or at least your willingness to get information from your clients, the more rapport you're going to build with them, and you're hopefully going to keep them from having any of these major pitfalls that can happen when dealing with associations. Even if you've ever lived in one, you may have some experiences, positive or negative, that you've that you will understand the importance of navigating some of these things and making sure your clients are covered. We've actually personally had some where maybe an agent on the other side didn't do their due diligence, and then they may end up owning a condo. So, why does it matter to have all of this information? The reality is there are more and more communities coming up where it is they are part of associations. So pretty much any new housing community you see come up, and it doesn't matter what builder, the way they're getting those approved through planning commissions means that these are actually they're they're called PUDs, planned unit developments. It's quicker to get those approved, but typically that means there's going to be some common elements throughout those, which means there's some kind of association, even if it's small or they just have very minor parts and pieces, it exists. So you're going to run into it more and more. And we'll get into it kind of in depth, the difference between HOAs, condo associations, and co-ops as we go through here. But they all have different structures and different rules. So making sure that you know the difference, even if you know enough to know, I don't know enough about this piece, I need to get somebody in here to help me answer some of these questions, you're going to set yourself up for success instead of failure. And our role as realtors within this industry is to really look at those different pieces and parts and help our clients navigate what's going to be important to them, things that they may not even realize may happen if they move into, say, this condo compared to this house over here. Uh, there's a lot of moving parts and pieces within those. We actually, just a fun little story, I guess, not fun for the agent on the other side, but we had a condo listing. This was several years ago, and not all of the condos in this association came with garages. The agent that represented the buyer for one that we had listed, after closing, once possession was given, gives us a phone call and says, where's the garage door opener for the garage that goes with this unit? There was no garage with that condo. Their buyer bought it thinking there was a garage. Because that agent didn't research the HOA or the condo association, sorry, and look into the details for each unit, how things worked and all of that, that realtor ended up buying that condo from their client so that they could get into a different house. So that is some of the importance on that. I mean, that's an extreme case, but we've seen it before where somebody maybe didn't check the pet policy and they ended up buying the condo so their client could actually buy something else that they could actually move into. So that's why this is so important. And that's why our role within this is so important. All right. So talking about HOAs, HOAs are homeowners associations. Those are actually the association where somebody bought the land, they bought the house, but they're living within a community that has some shared elements within it. That is different than a condo association. So when you're referencing things, you will actually hear a lot of realtors in our industry reference HOAs, and they're referencing both the homeowner association, but they're also saying that about condo associations. There is a difference between the two. It's not necessarily interchangeable, but you will hear people reference it both ways. So just be prepared for that. But homeowners associations, they're in place to kind of make sure that neighborhood looks a certain way. They maybe have those pretty entries with the big stone sign out front with the pretty landscaping around it. So when you drive in, it feels a little more formal. Some have maybe like a pool that is a shared element or little parks throughout. It just completely depends on that association, but they're all homeowners association, whether the only thing they're sharing is that tiny little entry area or if they have a lot of different amenities in there. When you're looking at enforcement, these HOAs will have rules in place. So it could be that they're looking at, okay, everybody's got to have the same kind of mailbox or whatever it might be is going to be built into the homeowners association documents that you're going to be looking for. And I will say, typically when I run into clients who are opposed to an HOA, they had a very bad experience at one where some board member went on a power trip and ended up out there seriously walking the neighborhood and saying, oh my goodness, you painted your front door red and we only allow earth tones or whatever it might be. And all of a sudden they had penalties and fines. So you will run into that. And you will see it's all enforced by a board, and the board members for that HOA are typically elected. A lot of times they may be the only people who volunteered for the role. And you do have people who will get into some power trips on that. I mean, we've seen it where maybe enforcement isn't universal throughout the neighborhood as well. So those are things you have to watch for and maybe get some information on for your clients. They also watch out for the financial management. So they're going to be collecting the dues, whether those are the monthly dues, annual dues, What are they supposed to be for? Are those for maintaining those entry areas? Is it actually that the roads throughout this community are private roads and they have to maintain those? Whatever it might be, they're collecting those dues and handling the financials for that homeowners association. When you're looking at the governing documents for an HOA, first thing I'm going to touch on is if you're listing a house in an association, get copies of those HOA docs and get them as you're listing the property. If your clients don't have them, ask for the HOA contact information so you can reach out and get the most up-to-date copies of these things. It is so important to get these documents so that you know what you're representing. And if you can't get them right away, let agents know if they're setting up showings that you're working on getting those because it is really important. And actually request those if you're going to be writing an offer as well, because you're going to need to know that for your buyers. So if people reference or you see something in the comments about the CC and Rs, that is the covenants, conditions, and restrictions for the association. This is actually fundamentally what they built the community on. Your initial set of these is typically going to have the original plat map for the development, even what's being built where, if there's specific floor plans that when it started. They, depending on how old that association is, those could be very old and there could be many modifications afterwards, depending on how many phases there were, whatever it was. This is also where they typically, although it can be in some of the bylaws too, but what can and can't be done with a property. So think short-term rentals, right? Some associations don't allow those at all. Some allow rentals for certain periods of time. Some only allow long-term rentals. But all of that's going to be outlined within those covenants and conditions and restrictions. Getting into the bylaws, those get into more the nitty-gritty of how the board operates, what their terms are, who's responsible for what, um, who makes what decision for the association, what a quorum is for a vote, all of the nuts and bolts of how it's run. And then you get into the rules and regulations. So that's your day-to-day things like, um, all right, can you park your RV in your driveway within this association? How long can it be parked there? Or can it only be parked alongside the garage as long as the front of it doesn't stick out past the front of the house? What kind of pet policies are there? How about the fencing for the yard? All of that fun, nitty-gritty little rules that come into play with an association or can are outlined in those rules and regulations. And again, there could be many modifications to those as well. So when you're looking at all of these documents, look to see when they were last revised. If it was a long time ago, you may want to ask the HOA if there's any updates. When you're looking at these, title companies can pull these. They're supposed to be recorded with the county, so they can pull those with the title work, and typically they do, but they may not see it if it wasn't actually recorded. So when you're looking at that, again, make sure you're talking to the actual HOA and seeing what information they can give you and get it as quickly as you can. It's that tip at the bottom there. These things, the earlier you can get them in a transaction, the better off you're going to be. But you need all of the layers here to see all of the notes. So when you're getting into also, let's say something actually wasn't recorded, but it was legally drafted and notarized, how is the enforcement of that? You may actually need to consult an attorney depending on where those things lie, but talk to that HOA president or management company if there's a management company involved. They're going to help you through all of that. Looking at their HOA, the fees, the assessments, and pros and cons, when you're looking at HOA dues, some are monthly, some are annually, they can be quarterly. I've seen them biannually. Depends on the setup of that HOA and what they're covering and how much the dues are. I have seen dues as little as $30 to $40 a year. I have not seen actual HOA dues being, well, I guess they are. There are some where they're over $1,000 a year, but they're broken down in the monthly fees. So research some of that. Don't just trust that the listing agent put everything in the MLS the right way with what is covered by the HOA. I'd love to say that we all are responsible and do that, but we don't always check it. It does happen at times where somebody copied another listing and maybe there were different phases within that association. And at that house down the street, it was covered this way and the dues were this. But this house is actually in phase three, not in phase two. So things are a little different here. So make sure you're doing your due diligence on that property and looking it up. Make sure you know the correct amount for those HOA dues also. We see that all the time where there are some homeowners who have no idea what they're paying in dues and they think maybe they're paying $50 a month. And then you call the HOA and they say, oh no, they're paying $79 a month. Make sure you get the right information. You want to put that out there. Um, Actually, one of the communities that in the Grand Haven area that has a ton of different phases with different rules and association dues is Forest Park. So if you've ever dealt in Forest Park in Grand Haven, or if you ever look at houses in there, make sure you look for the information yourself, because there are going to be some differences in there. Some of the pros for living in an HOA, you know your association, it's going to be maintained well. The lawns are gonna be mowed, landscaping is gonna be a certain way. You're not gonna end up with the junk cars in the front yard or whatever it might be that you could have in a normal neighborhood. HOAs typically have rules against all of that, which means it's gonna look a little nicer driving through. It does protect the property values that way because the house next door is not likely to be that hoarder house where they seriously collected everything under the sun in the front yard and covered it with tarps. Um, and it does sometimes give some amenities that maybe a homeowner wouldn't be able to afford to have a pool right in their own backyard, but the community offers a pool. It gives them some added features that maybe they wouldn't get if they were to buy in a typical neighborhood. Some of the cons, that goes back to, say, painting the front door. Are there rules against what you can and cannot change on that house? Or certain plants that you can plant in your landscaping? And yes, HOA bylaws, their rules can outline that specifically what you can do. They can outline what kind of fence you can put up around your yard. A lot of them don't allow those galvanized fences, the regular old, chain link fence that you would see. So those are some of the cons. If your person really wants to be independent, that may not be the best fit for them. You also always have that chance for a potential fee increase. Um, it's really hot out right now. If they're watering more, their water bills may be higher, and they may have to, say, increase the dues to cover the water bills. Or maybe the lawn mowing costs went up, or the snow plowing costs went up, and now your fees, your association dues will change. Same for, say, special assessments. If it's a private road and it needs to be repaved, does the HOA have the funds for that? Or are all the homeowners going to have to write a check? So those are some things to look at. The board disputes and governance conflicts, these actually do come back to you can have power trips within the board. You can have a change of officers, and all of a sudden they're trying to enforce rules differently. The reality is they have to be consistent on how the rules are actually enforced. If they let homeowner A down the street, let's say store their RV in the driveway for the last 6 months, but now you move in and they don't want to let you do the same thing, they can't tell your buyer no. If they've been allowing it for this person, they actually now have to allow it for all of them. So those are some of the things to look at too. But when you're getting into the argument with the HOA on, wait, you let Joe down the street do this, why aren't you letting me? It can be time consuming and it can get ugly. So those are things you just need to be aware of as you're navigating this with your clients. All right, talking about condos. And with condos in our area, you're looking at there's townhomes, there's condos. They all pretty much fall within the same thing for us. When you are working in other areas of the country, so if you got on some online, say, social media forum and somebody's talking about it, they actually may look at them differently. One thing to note on this also is condos are not the same as site condos. Site condos are actually typically HOAs. They are developments. You still own the land. Site condos were a quick and easy way to get something, or a quicker and easier way. They're not quick and easy to get them approved by, say, the Planning Commission. But it's something that you want to make sure you know, because I have actually seen in our MLS houses, actual homes listed as condos because the agent saw site condo and thought that meant it was a condominium. That's not the same thing. So just make sure you know the difference between that. But condominiums, you don't own the land. So you buy a condo, you basically own the interior walls and the interior, we'll say airspace of that unit. Typically, you don't own the exterior. I say typically because there are condo associations where you are actually fully responsible for the exterior maintenance of your condo as well. But that is where you're getting into looking at those bylaws and rules again, and the covenants and restrictions, because you need to know what is your person actually buying with this one, and what common areas are they owning in this as well. Differing from the HOAs, again, it gets into more what you're owning. HOAs, you are owning your land plus your home. The condo, you're owning that condo itself. Condo associations are run by typically an elected board. They have the same governing documents. They have a much stricter budget, and there should be collecting funds for all those common elements for maintenance. These can be managed by a private company as well. There are a lot of condos in our area that are managed by property management companies who specialize in condo associations. Your client should know that if you're listing the property, they should have contact information. But you can dig into that as well, pull up some old listings if your client doesn't know. But you want to know who's running it and get copies of all those things. And when you're looking at the ideal buyer for a condo, it's usually somebody who doesn't want to have to do exterior maintenance. They don't want to have to mow their lawn. They don't want to have to maintain flower beds. But you want to look at that also because there are some condo associations where you can plant flower beds and you are responsible for certain elements outside of your unit. When you're looking at your buyer who's looking at those lower maintenance things, make sure you're having a full conversation with them about why they're looking at the condo. If they just don't want to mow the lawn, financially, depending on the condo association, it may make more sense for them to buy a house and pay somebody to maintain their lawn. It just depends on the 100% their circumstances. And this is kind of off the subject, but on the subject. And if they're approved for, say, $350,000 for a house, make sure they understand that for a condo, they're not going to be approved for that same amount because the HOA dues become part of their monthly payment on that condo, which means their approval amount is going to go down based on how much those dues are going to be. It limits their buying power a little bit. So make sure you're really talking to them about what their motivation is for a condo. There are buyers that it is 100% the right thing for. And then there are buyers where you're looking at it going, I know you think this is the right thing, but you may be better off in a house because of XYZ. So have those conversations. All right. And this again gets into why you want all of the condo docs. Common versus limited common elements. There is a difference between these. The common elements are going to be the responsibility of that condo association. Your condo dues should be going to maintain those things. Limited common elements are typically your client's responsibility to pay for. And you need to know that as the listing agent, as the buyer's agent. If there's an issue with the exterior of your condo, you need to know before listing it, okay, this place has wood siding. We actually just sold one like this in Muskegon. Wood-sided condo, the paint was peeling horribly on the exterior of this condo. We got a copy of everything and found out that is the association's responsibility, had the conversation with the association, and learned that that condo we had was actually slated to be scraped and painted this summer. That is a huge thing to know when you're listing it, to be able to tell a buyer's agent that, hey, I know when you pull up, there's a lot of peeling paint. They are actually scraping and painting this. It's an association covered expense. There are not assessments for it. It's going to be taken care of because now when they come up, they know it's great, that it's peeling, but it's not a red flag in their brain. So it's important for you to know those kind of things. Who's responsible for what? Limited common elements, again, that may be the deck off the back. It could be some of them, it's the windows. When doors may be a limited common element that is your client's responsibility. So knowing the difference between a common element and a limited common element is important. And knowing that when you're looking at the list on the screen of what these different things are, it's not universal. So you need to get a copy of the condo docs, the full condo docs, to make sure you know whose responsibility it is. And don't just read those original CC&Rs that we talked about. Look for any amendments as well, because that condo association may have amended things to remove or add something to the common elements or limit common elements. Say, this is one of those things that can really trip people up. And it is so important as you're doing this to set your clients up the right way, whether it is your buyer or your seller. And again, action item for you, make sure that you actually look at what is within these documents and have the conversation with your client. Make sure you send your client the documents and tell them to read through them line for line. Don't let them just assume you read it and gave them all the information. Now you're open to the liability on it. Get some documentation back from them that yes, they did receive them and understand that they need to review them. Some brokerages actually have a form they have you send out for that. So make sure you're covered on that as well. But it's important that you have some idea of what's within these as well. So when you're negotiating for your client, you know what you're negotiating for with the other agent on the other side. Oh, condo financials, and then the loan information. Getting into the financials, this can be one that can be a very big nightmare if you're not covering your clients properly. Um, so, and we'll get into some of this as you're writing offers and things, what to put in your contract. But get a copy of the budget for the association. And you want both the budget, but you want them also to show you where you are year to date. And you want the last year's budget as well, with where they actually ended up based on their budget compared to actuals. Because those are two different things, and their budget could look beautiful. Like they're putting all kinds of money aside to go towards the common elements. And then you actually look at the actual financials and you go, wait a minute. They didn't actually put any of this money away, or they put this money away, but then they overspent on what they had budgeted for the common elements by 20 grand, and now they just ate into whatever they had as their reserve fund. So it's really important that you look at the financials with your client to make sure they're not going to get into something where they're going to be underwater. Look at your reserve funds. They should be, when you ask for financials, showing you what's in their reserves as well. It can be a huge red flag. Let's say you have a community with a clubhouse and a pool, and you look at the pool and all the tile is chipping inside this pool, and the clubhouse roof is peeling and looks like it should be pouring rain inside that building. Do they have the reserve funds to repair that building, to repair that pool? Because if your client is buying into this and that's part of the value, what happens if all of a sudden that pool has to be filled in because they're not maintaining it? The value of that house just dropped. So you want to make sure those funds are there to help cover your clients. So again, they're not getting into something that could actually really hurt them. Looking into funding, financing on condominiums. So a lot of people don't realize that FHA and VA loans are a little trickier on condominiums. They have to be approved by FHA or the VA to be able to be financed that way. There are very few condos anymore in our area that are FHA approved. It's been quite a few years, but FHA went through and changed up how they approved condos, and it just wasn't a lifetime approval. They didn't actually fully notify the condo associations, though, when they changed up the rules. They sent an email out, but nothing else. And a lot of these associations that were once approved just didn't refile for new approval, and then they were taken off the list as approved. Well, now to get approved again, it does cost them quite a bit of money, and they don't necessarily want to spend that money to get reapproved. There are ways that you can actually check. There's a list online. You can look up the FHA approved ones. You can actually just ask the lender your client is working with if these are FHA approved, or if you're listing it. We all have trusted lenders that we work with. Reach out to them and see what they're saying, if they're actually approved or not. VA the same way, but also be aware that you can get one-off approvals on these. The whole association doesn't necessarily have to be allowed to be approved. You can actually file for one condo within that association to be approved for that financing. So that's going to be a conversation with your lender to see what they know about getting those approved, whether they actually allow that, because again, not all allow that. Um, okay. So again, have the conversation with the lender. Hey, do you guys do this where you can get them a one-off approval for this condo for my VA buyer? Again, some know how, some don't. That's where also having a couple lenders that you know that you can talk to really does help you. Because if the one you're talking to can't, it may be in your best interest to help your client to look at, okay, maybe this lender that I know we love and trust can't do this, but let me check to see if another one can do this for you if you're in love with this community. Don't have it on the slide here, but one of the other things to look at is warrantable condos versus non-warrantable condos. If you've never dealt in condos before or done very limited, you may never have heard of this. But this is a huge thing too, because it affects the value of the condos on whether they're warrantable or not warrantable. The most common thing I've seen with this is that they're non-warrantable because too many of the condos within this association are rentals. And it's not short term, it can be long term, or they're second homes. If it's not a primary residence, that can come into play, but it's usually somebody bought a couple of these up and they may live in this one over here and they rent out another one or two other ones, whatever that might be. But if over a certain percentage of them are not, are rentals, you can't get traditional financing on those, and they're going to have to go with a portfolio loan instead of a traditional conventional loan. There are some other restrictions on that as well, but that's where, again, your lenders are going to be your best friend on that. Talk to them about this association. If you have a client who's bidding on a condo, like a buyer is bidding on a condo, or you're listing a condo, it may be worth talking to a lender and looking at the details and having a condo questionnaire filled out in advance by the condo association so that they actually can figure out if these are warrantable or not warrantable. The last thing you want is to be the listing agent on something, have it listed for a few weeks, have invested all this money into it, only to find out after you get the offer, oh, wait, these can't be financed traditionally. And now I just hurt my client's value and their odds of selling this. Um, on the buyer side, you don't want your buyer to have gone through inspections and all of these things and have money on the table and have the appraisal done and find out after all of that that they can't get that traditional financing. And now they've got to do a portfolio loan that maybe requires they put more money down, something along those lines. So just make sure you're looking at that. And if you find out they're non-warrantable, talk to your client about the risk of those because they are more difficult to finance. The value is typically lower on those, and the resale is more difficult. So if your client is looking at this as a short-term plan and they want to live here for 5 years and then maybe retire and move into something else, this one condo may not be the best fit for them if they're non-warrantable because their value may not increase the same way as another condo. So there's a lot of different loopholes that you need to look at with the financing end of things. It's not just, gee, my client can get a loan and it doesn't matter which one it is. So again, from that perspective, lenders are your best friend on this, but make sure you're really talking through the details. All right, co-ops. We do have those in our area. We don't have very many, so I'm not going to deep dive into these. I'm going to go through these a little more generally. Again, we don't have very many, but we do have them. So if you see them in the MLS, or if somebody calls you to list one and you've never dealt with a co-op before, enlist the help of your broker. If your broker doesn't know, ask them who they know who would have some experience with this. And it may actually be in your best interest to refer the buyer or the seller off on this to another agent who really understands them, because they are a completely different animal. You're not actually buying, you're not buying real estate with these. You're buying shares, like you're buying stock into a building, kind of. I mean, so you don't actually own the building. You're owning the rights to live in this specific unit. So it's a way different ballgame. So that's where that proprietary lease comes in. It's not a deed of ownership, right? You have this permanent lease that comes with what you're purchasing, but there is a whole approval process and all of these different things and some very different rules and regulations to these. Um, the one I have seen the most, there is a co-op in Spring Lake. That's the one I've seen the most when they come up for sale. And you'll see it come up listed, typically listed as a condo. The price on them is going to be really ridiculously low. That's where you can, okay, there's a flag in my brain. This isn't actually a condo. This is most likely a co-op. Look into what it is. We don't, again, in West Michigan, we don't have very many, but they are there. Financing of them is way different. You're going to have to find a specific type of lender. Um, Typically, it's going to be the smaller banks. Typically, they're going to be more portfolio type loans on these. Approval by the co-op is a whole different process. Condo associations can require that you're approved by the association, but those are some basic rules. Co-ops can have some much more detailed rules, much more detailed restrictions. How you can resell these is very different. Whether you can resell it within a certain period of time, or if you have to offer it back to the co-op first, it's just a completely different ballgame. So that is one of those, like I say, if you're not familiar with them and you see something or somebody reaches out, find somebody to help you navigate these, because it's just not the same as other ones. We actually had a client, it's probably 7 or 8 years ago now. They actually went in as a retirement home and signed paperwork to buy into the co-op, and they did it through the listing agent, not understanding what was happening. They did get us involved soon enough that we could get them out of that contract on that co-op, because it absolutely would not have fit what they needed. And the co-op fees, their monthly fee was way higher than what was originally disclosed to them. So with their limited Social Security income, they couldn't have even afforded to live there very long. It would have eaten up their entire retirement account. So again, you want to make sure you understand what you're doing, because you don't want to set somebody up for that kind of situation. If these clients of ours hadn't have reached out to us, it really would have been a difficult conversation after they bought in to try to figure out what we could do to help them figure out how they were going to live and how to get out of that and sell it after they just put all this money into it. So again, they're not normal or typical, I should say. So this is where you're looking at that board approval. We touched on this a little bit, but co-ops, they have their own rules and they can actually reject on different things than a condo association could. Some of it to me gets into borderline fair housing issues, but the reality is, because it's this group ownership thing, it's a completely different type of management. The financing challenges, again, we touched on that a little bit. The loans on these are not typical. They typically need a bigger down payment. Their terms are going to be way different, probably way shorter terms. So if you've got somebody buying in and they were looking at a condo at this price and the co-op is this price, that doesn't mean their monthly payment's going to be the same. The interest rate's going to be higher on it. And if you're looking at all of a sudden it's a 15-year note instead of a 30-year note, that payment is drastically different. They also, on co-ops, if for whatever reason, let's say your person wants a roommate or needs a roommate down the road, it may be completely off limits for them to do that. House rules come into play. So think about it as you're leasing this space over here, and there's somebody leasing next to you. If they don't like how loud your TV is, they actually can go to the co-op and it can become an issue that way. There are so many different rules and things that can come into play with it. I'm not saying a co-op is all bad because there's always circumstances where it is the right fit for that person. It's just completely different than a condominium. So when you're looking at those takeaways, you have to look at that big picture. Touches on over here, on that box on the corner there, the seller actually doesn't fully get the say on who buys their place. They don't get a full say on even what they get for it in the sale. The board for the co-op actually has to have a voice in that and has to have a say in that. Again, just a totally different animal to deal with. So if you see them come up or if you see something you suspect is a co-op, do your research so that you can advise your client the right way. When we're talking red flags, we are now talking red flags across the board for everything we've talked about, HOA, condo, and co-op. The biggest thing you have to watch for is the financials. Financial instability in any kind of association can cost your client a ton of money or make it close to impossible to sell. How many of you have heard the nightmares going on with condos in Florida? So, yeah, we own a condo in Florida. I can tell you it's crazy. And if you're seeing some national statistics, Florida is skewing the market for condos because national statistics are going to say there's like years worth of inventory of condos available on the market. That Florida is skewing that huge. Florida has a couple years worth of inventory of condos sitting on the market right now because of the financial instability of so many of those things and the legislation that it got slammed through. It went through way too quickly, in my opinion, but it got slammed through. And now all these associations had to triple, quadruple their association dues to build up what they need in reserve funds, which meant now these people are getting foreclosed on because they can't afford to live in the condo they bought as their retirement home or whatever it might be, or they bought it as an investment, but now they can't possibly make money on it. So things to watch for, the low reserves. If you're seeing financials come back and they have less than 10% of their annual budget in reserves, that is a huge red flag. It means that if something comes up that is outside the norm, there's going to be an assessment. If your client buys in, all of a sudden next year, there could be a $10,000 assessment on that same association, the same dues, and they have to pay that money up front. It's not typically broken up into payments. Do they have that sitting there? You need to know that. You want to look at a history of special assessments. So again, when you're looking at the financials, you will see line item for assessments. If you're seeing income and assessments quite often, or there's a lot, it means that they didn't plan financially for the association and set that association up properly to move forward, which means your client is most likely going to get stuck with another assessment down the road. Delinquency rates, this is talking about how many of the owners within that are behind on their dues. This actually affects financing on these too, getting back to that warrantable and non-warrantable on condos. If too many people owe back HOA dues or condo dues, it actually can make it where you can't get traditional financing within there anymore. It actually also makes it where that association may not be able to get insurance, and it's very important that they're insured. So those are things to look for when you're looking at writing an offer, and I do have another screen on this, but when you're looking at that, always ask for, or if actually even listing it, ask for the last 2 to 3 years of board minutes. So you want the financials, but also get the board minutes because those board minutes are going to show you how often are they voting on assessments? How often is something coming up within the board minutes showing how many people haven't been paying their dues or where they're having shortfalls? The minutes tell you way more than you would think they would. It's not just some of the, well, we voted this through or voted this change. It's going to give you some of those other things as well that can really make a difference for your clients. Other red flags to look at, are there active lawsuits, pending litigation? Is somebody suing the association for something? Structural defect litigation. You don't run into these as much because we don't have a ton of high-rise condos around here, and that usually is where they come in, but it can come up. Think about if a condo is, say, more than a few stories and it's along a waterfront. Did they put in the right substructure for that, or is it sinking? Looking at some of those things as well. Or was something installed improperly on the exterior of the building? That could come into play as well. Insurance gaps, if you ask that HOA or that condo association for copies of their master insurance policy, you have the right to see if they've ever been canceled, and they do have to disclose that to you. You can ask those questions. Do that for your clients. If they ever let it lapse for a while, what happened? Why did that lapse? Was it because they were trying to hide something? You never know. And you can ask for that certificate of insurance and ask again about these lawsuits. They have to disclose that to you if you ask for it. So when you're writing an offer on one of these are the things to always ask for your buyers. And I'm going to say this buyer and seller perspective. If I'm writing all of this in for my buyer, I am putting in on that purchase agreement that seller is to provide, and I am putting a time frame. The seller is to provide the financial documents, including current budget, prior year's budget, reserve fund statement, the last 12 to 24 months. I usually ask for 24 months of board meeting minutes, litigation disclosures, the history of assessments for the last 10 years, and all of the governing documents, all of those condo documents. And I am asking for that seller to get us those within, I usually ask for it within, say, a few days. They have to provide it. If they don't provide it within those couple days, you actually have an out for your buyer. You also, when you're asking for your buyer, you want it subject to your buyer's receipt of those within so many days, and it's also subject to your buyer's review and satisfaction with all of those items. If I'm the listing agent, I'm going to tell you you have 7 days from receipt of those to review everything because I'm looking at it as I need to protect my seller. If I'm writing it in from my buyer, you bet I'm leaving that open-ended so that they've got all the time in the world and it's got a loophole for my buyers. Again, you want to look at it both ways, but don't be surprised if you write it for your buyer that way. If the listing agent comes back and says, yeah, fine, we're fine with that, but you have so many days to review these after receipt and come back with any concerns. So you say when you're looking at that, these are the important things to ask for. We run into it all the time where people don't ask to review these items. It is your responsibility to do that. It is very important that you take care of your clients and get this information. So when you're looking through these things, look at, first of all, plain language. And I'm going to say use the plain language. I don't care if you're talking HOAs and co-ops and all that. Anything you're doing in real estate when you're talking to your client, do not use our jargon with them. They don't know what any of that means. So make sure you're fully explaining what those things are and what the details within those things are. Looking at the lifestyle fit, have a full conversation with them, figuring out why they want what they're looking at or why they're opposed to certain things, because you can now help them guide them through the whole process of what they should be looking at and maybe give them some other options that are a better fit that they may not have thought about. During your showings, make sure you point out the common areas to them and amenities, drive them past them so they can look at them. Also, you should be looking at how those are maintained because they're going to give you some idea of whether this association is financially viable or not. Negotiations, again, make sure you're factoring in the dues that are there, whether they have the reserves, all of those litigation things. What's their true cost of ownership within this place? And during inspections, make sure you're looking at those governing documents, not just the physical inspection, but they both matter, right? And when you get the physical inspection, are there things that should be, say, covered up by a condo association that are being flagged? Have the conversation with the association on when they'll have those fixed. So those are some of the things that you just want to look at while you're guiding your clients. Say, I know we started a little late, so just a couple more points here and we'll be done. Looking at helping your clients compare the communities, help them build that side-by-side comparison. So if you're looking at two different condo communities and the HOA dues on this one are this and this one are this, make sure you're helping them figure out what's covered by one that's not covered by another. If they're covering the same thing and one is $150 a month higher, why? Make sure they're looking at all those details. Again, looking at lifestyle priorities, pets is a big one. Can they have these pets in this HOA, in this condo community, in this co-op? Can they have their two little dogs, or is there a one pet rule? You can ask for a variance on that, but you want to know when you're writing the offer, prep your client that, hey, we'll ask for the variance, but you may not be able to get it. So if we can't get it, this may not be the place for you. Rentals. Can they lease it out if they need to? Let's say they need to go into assisted living. Can they rent that condo or that home out long term to somebody else? Or does that association not allow that? Renovations. What do you need board approval for? There are some homeowners associations. You can't change the shutters on the front of your house without the association saying, yes, you can do that. You need to know those things and need to know if it's a concern to your client. If they want to change out the mailbox, but the association says, nope, they all have to be this same exact standard mailbox. You need to know that so that when they move in, they don't come back to you and say, well, you didn't help me navigate this, and I'm not happy with this, and I don't want to live here anymore, and now they're mad at you. Parking. How many guest parking spots does this condo community have? Do they allow parking on the street in this HOA? Looking at all this, make sure when you're looking at your buyers, that you're telling them, look, we're looking at this once. This is a long-term commitment in this purchase. So we want to make sure you fully understand what you're getting into because we want it to work for you long-term. We don't want this to be, you get in here, live here a year and figure out none of this is working for you. It is a big decision. So make sure you're really helping your clients through that. And again, we touched on all this, but know the rules, know the documents, know the finances, and know that your role is to educate. It's not just to get that deal done, to get that commission check, to get through this. Even if your client absolutely loves this place, if you didn't give them all of this information, you could make this their bigger nightmare. And you want to make sure they're happy with you because you want them to refer their family and friends to you. You don't want them telling everybody, oh no, don't work with so and so because they really screwed us over on this one. They didn't tell us about all these different things. So, like I say, that's what I have in a nutshell there. Are there any questions, any comments, anything you guys that I touched on you have questions on, or anything I didn't touch on that you have a question on?
Hi.
Yeah, go ahead.
Oh, Alessandra Bianchi. I have a question.
Mhm.
First of all, will we receive this presentation?
You want the slides?
Well, especially the one of all the documents. And the reason why I'm asking is because I sold a condo in Kalamazoo.
Mhm.
The board in Kalamazoo already has a sort of the checklist that you have to have. So the seller already knows and the buyer also already knows because what you're getting into sometimes in West Michigan is like and I also have a condo in Florida, so I know what and I'm licensed in Florida as well, so I know what you're talking about. And it's very normal there to ask all the information, board meeting minutes, financials. And sometimes when you ask those same questions here, the listing agents get offended. You know,
It's
the
usually because they
sellers,
don't know.
huh?
It's
Yeah,
usually because they
so
don't know or understand. Yeah.
so it would be really helpful to have that slide, maybe also
Mhm.
sent to all the brokerages, I don't know, so that everybody knows that this is what we have to ask. So both on the buy side and the seller side, is not that some agents are being more annoying than others.
Some are just doing more due diligence than others.
Yeah. And also it will be, and here I'm talking to WMLAR, I know I'm not part of any board, but it will be also good to have a form from WMLAR that says, hey, when you're buying a condo, this is what you have to have.
So it's not required by law. So that's where
Yeah.
WMLAR wouldn't be giving that form out because it's not something that's required. There are some brokerages that have a form. So you could check with your broker. I'm
Mhm.
happy to I'll get Andrea the slideshow and she
Yeah.
can forward that to everybody here. Absolutely. But that's where you're not going to see a standard form within any of, say, the WMLAR documents or MISHRIC documents. It's because by law, it's not required.
Yeah.
It's just for us to, if we're doing our job the right way, we should be requiring it and we should be
Yeah.
requesting it.
Yeah.
Mm-hmm.
Thank you.
Mhm.
It was a great presentation. Thank you.
Thank you. Anybody else?
There was a question a little bit back ago from Dharma. How do we determine if they're VA FHA approved?
That one is going to be, again, the easiest way is to talk to a lender because
Yeah,
they have
you had said
access.
it right after
Yeah.
I typed it.
Oh,
So you're
okay.
good.
Oh,
Okay.
But
Okay.
yeah,
sorry,
talking to a
Dharma.
lender will do it. I get it.
Yep.
Thanks.
Yep. No
We
problem.
love our lender friends.
Yes.
Awesome. Well, thank you all so much for being here. I apologize for the delay in getting started. I had some tech issues and then the phone call and all the things. So I apologize so much to everyone. Thank you all for being here. We will look for this replay in our memo probably next week. Emily's pretty quick about that. So thanks again to everybody for being here. We are grateful for you all. Be safe out there. It's supposed to be wicked high heat temp and all the
Yep.
things and whatever. So be safe out there and we'll see you soon. I did put in the chat about, oops, I forgot to do the survey link. I'll send that to you. But Stacey will be teaching a hybrid code of ethics in October. So
Mhm.
make sure that you plug into that. Even if you've already taken it online, Stacey's class is a lot more engaging, interactive, informative, and real life for you right here in West Michigan. So be sure to check that out. All right. All right. Thanks,
Thank
friends.
you.
Have a great day.